Hey, everybody, welcome to this week's Top Stock Pick of the Weeks. It is me, Dave Bartosiak, along with this guy, Jeremy Mullen, and we're going to share some picks for you. So, Jeremy, I'm going to go ahead and go first. Let's take a look at Zacks.com and see why I like gambling.com, GAMB, not because I'm a degenerate gambler, but take a look at this stock. So, it is currently a Zacks rank number 2 buy with a Zacks value style score of D, growth of B, and momentum of F to help it round out with a VGM composite score of D. The advertising and marketing industry, which is officially what gambling.com is in the bottom 21% of our Zacks industry rank. So this is one of those stronger stocks in a weaker industry. Let's take a look at the detailed estimates page here and see why I like it. You can see earnings growth, 59.46% for the current year, 44% for next year. So some monster numbers in the year-over-year growth, which is what you want to see when you're swinging for the fences. The recent earnings estimate revisions, we've gone from 80 cents, tick down to 79, back to 80, tick back up to 85 cents for next year. That's two analysts upping the ante of the core over the course of the last week alone. Why were they doing that? Well, the stock just reported some earnings, yet another earnings surprise. 41% better than expectations, or 5 cents better than expectations. So we got a real positive trend here in the stock, moving in the right direction. I like to see that the earnings are ticking up. I like to see that they just had a beat and prices following along with it. That's my top stock pick of the week. Jeremy, what do you got for us, man?
Thanks, Dave. I like gambling. I like gambling.com. I think that's a good pick, but I will be doing Ross Stores. Zacks rank number 1 strong buy with the ticker symbol ROST. Company operates as an off-price retailer of apparel and home accessories. It's only up 2% on the year, but it's up 70% off the 2022 lows set last summer. The turnaround is directly related to a streak of earnings beats that has Ross approaching all-time highs. So let's dig into this name, talk about those earnings, and where the stock may be headed. Okay, here is the profile page you're looking at. A little bit about the company. It was founded in 1957 and headquartered in Dublin, California. The company employs 100,000 people and has a market cap, if you look right here, right over $40 billion. It does pay a 1.13% dividend, so a nice little dividend there. But here's the Zacks rank number 1, and what they're looking at is growth and momentum here. Value, we have a 23 forward PE, so that's not what investors are looking at. We're looking at the growth and momentum. And looking at the recent earnings, we begin to see why investors like this. Last quarter, which was reported last week, we had a 13% EPS beat there. And you can see this is the 5th beat in a row. The last miss was way back in May of 2022 when inflation was really eating into their bottom line. You can see how the stock was bottoming out here on this earnings miss. However, the company has managed this issue very well. And with inflationary issues, pressures easing, they are starting to see results. So along with the beat, they guided Q3 higher to a range of 116 to 121 versus the 115. And they also raised their fiscal year 23 guidance. Same-store sales were up 5%. Operating margin was 11% year over year. Management said the strong quarter was due to those easing inflationary pressures, as well as customers' positive response to an improved value offerings. Additionally, Ross commented that they are doing a share buyback. So they have already bought back 2.2 million shares, and that's worth about $230 million, and they expect to do $950 million more of purchases this year, which is part of their $1.9 billion repurchase program. Okay, let's look at the estimates now. If we go down here, we can see the agreement is pretty good, right? All the analysts are taking their estimates higher, except one for next quarter. But pretty much we're going higher across the board. If you look at the actual numbers over the last 7 days since earnings, we have about a 4 to 5% increase in estimates since those earnings were released. So pretty good there. Along with estimates, analysts are raising their price targets as well. We have Morgan Stanley going, they have the stock at overweight. They raised their price target to 131. Guggenheim and Loop Capital has 135. Our retail analyst Telsey has a market perform, but lifted his target to 130 to 120. They cited those easing inflationary pressures and strong traffic as catalysts for strong margins. They said that cosmetics are leading the way for that top line, while lower freight has assisted on costs. And the most bullish one I saw on the street was 140 price target from Bank of America that was up from 135. That's almost 20% move higher from current levels. So let's look at those charts and see how we can get there. We have a chart going over a decade back. And what I have is just this kind of trend line that's set up into that COVID crash. And obviously that broke on the COVID crash. And we had the resistance here. And we bounced back pretty nicely off this Fibonacci retracement. So that's down from these lows to highs to 61.8. Set it pretty good. So what I like to do is I take the negative 23.6 as targets. Didn't quite get there. And we fell into this downward range here. And recently, or last year, when the stock was bottoming out, we came back to the halfway back mark, and we're marching back towards those 2021 highs. So let's zoom in and see what the next step is here. What I have is another Fibonacci extension drawn from these highs to lows, where I'm targeting way up here. Now, this might take a while to develop because this stock, really, it's not a tech stock, it's just retail. And so this could, for long-term investors, this is what you want to look out for. For shorter-term guys, let's look for a trade. The 200-day moving average is held up pretty well. That's the red line. And the 50-day moving average is just kind of married to it over the last couple of months. This 21-day moving average has been nice support for it. So if you guys looking to buy any kind of dip, watch that 21-day. But you might not get it. We're at those 2023 highs almost, and we have broken a Fibonacci 61.8 from these highs to lows. We've broken that. So what I target is this extension at 137 that kind of lines up with that Bank of America target of 140. So I think by the end of the year, we might be able to get there as we get into retail and the holidays, and that could be a real tailwind for the stock. So in addition to that, with almost 1 billion worth of shares to buy back, it's going to have some support. So if you guys looking to buy a dip, I think this can be a real winner into the end of the year. Okay, that's it for me and my top pick, ROST. Dave's was GAMB. I hope you guys enjoyed these videos. If you like what you heard today, go to zacks.com/promo to learn more. Have a great day.